Hey everybody, let me know if you can hear me or not real quick and we can get going. Just type in the chat real quick. You don't hear me. Yeah, tight. Alright, cool. Yeah, we can get going. Give me 1 second. Alright, you guys can see my screen. Cool. Alright, we'll get into our game plan. Gonna center around SPX. We'll hit on some single stocks at the end. So if you got some specific names you want to look at, drop those in the chat. We'll go through the Mag 7, some of the other big boys like Palantir, Uber, Coin, Hood, all that good stuff. Google was really the only one I saw setting up around a key level this morning. So keep that in mind. But yeah, getting into our SPX game plan. Let me go to something real quick. So if you go here to GameEdge.us, if you go to our blog, we have a ton of different articles that we're going to hit on. Multiple tools today. If you're not familiar with those, feel free to go to our blog where we have in-depth kind of deep dives, actual takeaways on how to do that. The one today is going to be around our market, our pre-market plan, market trending framework is how we characterize it in this article right here, but it's all the same stuff. The way that works is we look at SPXA, we look at SPXP, full complex, just to understand broadly how the market is positioned via the options market. And then we'll go into 0DT for the SPXs, kind of get tactical on, for any intraday trading type of stuff. And just to clarify, this stuff is for if you're a directional futures trader like myself, if you're a swing trader, understanding the broad market context is important. And then, if you're selling premium intraday, we got a lot of people in the community to do that. And then if you're buying debit spreads, a lot of people do that too. So this is not just one specific type of trader, right? We're meant to overlay an existing strategy, whether that, you're using technical analysis. Some of these levels we'll talk about can be complementary to that. Or, if you're into options flow type of stuff, you can kind of layer on this stuff as well. So, and if you have no idea how to incorporate this in your system, then when I'm done with my kind of prepared remarks, we can go through that as well, or come in the Discord. Happy to have a conversation with you with that as well. So SPXA, this is the cruise ship. This is your longer term kind of institutional money, so to speak there. We have 14 million contracts, so it's significant in size. The takeaway of this is, call dominated structure, so everything is good to see there. If you want to kind of read more in depth on the notes that we have in the Discord, feel free to do that. I'm not going to read word for word here. I trust that you guys are capable readers there. True zero, so as we're trending higher, good to see. GEX ratio, still healthy in the context of an uptrend, so a little bit of a pullback yesterday, but the down move we had intraday, that's not surprising to see, but we are above 1 still, which 1 is, meaning call gamma is greater relative to put gamma in the structure. However, 1 does not really look to be the relevant benchmark, so to speak, when looking at this time series, kind of once we start getting down into the 1.1, 1.2, so that'd be kind of a healthy pullback there. But so far, kind of in healthy territory still, just a little bit of a pullback there. Delta balance, what this simply is doing is we're just looking out in time into the future expirations, because one of the benefits of the options market, right, is it is inherently forward looking. So we can understand how speculators are positioned out in time. And that's exactly what this is telling us. And so we have the green line, which is all strikes above spot price. The orange line is all strikes below spot price. We aggregate those to understand how folks are positioned above and below spot price. And then the blue is the net of those two, and you can think of this as an oscillator between -1 and 1. So we're pinned at 1, which is good to see. So out in time, those strikes are bullishly positioned. Same process for the that is the SPXA. This is just looking at the front month contract, which is the July expiration, which is call dominated above the spot price. Simply just see there's a ton of green there, so that's good to see. Next, looking at SPXP, this is more of your kind of short-term tactical traders. You can see there's only 4 million contracts relative to the 14 million in the SPXA. So this is your faster moving money. It's going to turn over quicker. So just from kind of a trader's point of view, which is kind of what we focus more on, kind of your multi-day to multi-week, intraday, multi-day to multi-week kind of swing trading time frames. So we really like to focus on this. And then also as part of the market turning framework, this is what changes quicker than the SPX-A. So your kind of early warning signs will filter in the SPX-P first. But things to note: above and below spot price, call dominated, good to see. There's an iron condor structure in place today. And so that is kind of having an impact, especially on the 0DT, which we'll get to in a minute. Transition zone outlined for you right there as well. That's the blue and the white box. We have an article on the transition zones again too in our blog right here. Transition zones are key to our process, so just make sure that you understand those. Hey, can you guys confirm if my audio is low or not? I just had a comment saying it was, but I feel like I'm talking pretty loud, so I just don't know if it's one person having the issue or multiple people. All right, well, I feel like I'm shouting, so I'm not going to change, but hopefully it gets better. All right, maybe you guys just need to turn your audio up a little bit. Going through the same tools. All right, cool. Going through the same tools, looking at true zeros, trending higher, good to see. Looking at the GEX ratio. So this is a bit lower. This is a bit lower than the SPX-A. You can see a bit of a divergence between price action moving higher, GEX ratio moving lower. So this in of itself is not necessarily an actual signal. It's just more of the context of the market saying there could be a little bit of deterioration in the structure. So we just need to keep our head on a swivel here. And especially as we looking at the market trend model, which I should have hit on at first, but I didn't. We can see weakness in the short term. The cumulative tick lost a railroad tracks yesterday. We saw filter six selling throughout the session. So this is kind of more of a short-term pullback in the context of a longer-term uptrend, just given what our rainbow ribbon is doing. But again, we want to see confirmation that we push higher before we kind of get enthusiastic about upside momentum again on a swing trading time frame. Again, article on the blog about the market trend model if you're not familiar with that. So let me get back to where I was. What was I? Oh, I was in the Discord, sorry. Yeah, same thing, looking at delta balance, pinned at 1, good to see. All right, now we're getting into the SPXP 0DT structure. So here, just highlighting where that iron condor structure is at. That's 6260, 6265 is the top, 6185, 6190 is the bottom. Then we have our transition zone in the middle from 6210 up to 6255. And then, where is it? Yeah, going through, again, pre-market prep, we have a lot of detail on those specific strikes. If you want to kind of get the nitty gritty, feel free to read that. The TLDR of that, though, is just kind of understanding the level to levels moves that we often see in the structure and how to play that. So let me see where we're opening real quick. SPX. So we're opening 6240 more or less is kind of where we're opened right, or implied to open right now. So yeah, I mean, that's kind of the middle of the drunken sailor range. So really in this zone, not Super Bowl actionable in terms of anything to do. Granted, yes, you can do stuff, but just in terms of kind of transacting at a key level, which is what we like to do. There's nothing to do right now. We would need a push to the upside, right? Kind of around this iron condor structure, top of the drunken sailor range, to kind of get our first kind of reference point of the day. If we continue to push higher above the drunken sailor range, or if we reject and then kind of either meander around the iron condor structure, if we reject off that structure. Again, there's just massive. When you look at the distribution of speculation, we like to use a net open interest for that and understanding how people are positioned. There's just a ton of speculation up here. So that's really going to take a lot of intraday volume, or just a lot of buying intraday to push us above this level and hold and maintain above this level to see kind of a next thrust higher. And I'll hit on an intraday tool in a second of what we'll look at to kind of understand if that's happening or not. So oftentimes what we see is kind of a stalling or rejection at this level because we're not able to overcome those strikes. Just think about it, this massive negative charm pushing down on us, kind of like a weight on the market. So we need to overcome that. via intraday buying if we want to surpass what those forces are doing. And then same thing to the downside. Really not super interested until we get around 62.10. If we lose 62.10, then we'd be looking at the iron condor structure to the downside, 61.90, 61.85. So all the comments I talked about above apply below as well. And then specific to kind of what we're looking at on an intraday basis. So this is just yesterday's intraday volume. What we do, we look at SPX 0DT volume on an intraday basis. Again, article on the blog if you guys are not familiar with what it is that we do with that. Look at this intraday volume tool. So effectively, we're just looking at the trend of intraday volumes, the distribution, kind of the middle point of how people are transacting throughout the session to understand the character of price action in terms of are we moving higher, lower, or sideways, and is that supported by the actual folks transacting in the market, and then B, all else equal, if we know where the centroids, which is the middle point of a distribution, if we know where those have been trending throughout the session, we can have a pretty good idea of where spot price may be headed through the end of the session, because spot price follows transactions, i.e. the centroids, which is what we're plotting with the solid green line. And if you guys aren't familiar with this, we have time. I can go into more detail if you want to. So this is a key intraday tool that we use, and just so you can see kind of how this looks on an intraday basis. Right, like this is what it looked like at 2 o'clock p.m. Eastern Standard Time, right? We knew what all the transactions had occurred up until that point, so all things equal, we can project out where spot price is likely to head because we know where the centroids are likely to head. So that's very beneficial for intraday trading, both from selling premium above and below the centroids, above and below key levels, and then also just from more of a directional point of view, kind of understanding, okay, should I be looking long here, should I be looking short here, all that good stuff. And then obviously marry that up in the context of what our intraday cumulative tick and filter tick are doing. It's pretty strong. So that's all I got for 0DTE. Looking at the Mag 7 components. These are just our pre-market scripts that we have overlaid here. So Google, you can see we're interacting with P transit at 177.50, so that's going to be a key intraday level. If you're looking to transact on single stocks, good one to look at. Everything else is really kind of in the middle of key zones or in the middle of key levels right now, so not really a ton to do. Nvidia bumping up against 160, which is plus GEX and COI, so kind of move there has been done. Meta, had a lot of interaction with actually P-Trans in the overnight session, which is kind of 715 to 717.50. So maybe we get a retest of that, then a push higher. That would be potential entry there. Palantir, not much. Amazon up at plus GEX pretty much, so not much to do there. CoreWeave, I was just looking at that. So 0 GEX 157.50 has been respecting that in the pre-market, so that's a good one to keep an eye on. Let's go to some other popular ones. Circle, it's coming down to 0 GEX, coming down to COTMP level. That was COTMP is the article we just wrote about this weekend, kind of a key profit-taking area. Oftentimes on single stocks, COTMP is a really good reference level to the downside. So, maybe we get a retest of that, not sure. Look at AMD. Yeah, not much there, just in the middle of the range. Looking at Hood. Nothing there. MSTR, nothing there. Uber. Not much there. Coin. Yeah, not much there. So yeah, single stock wise, not really a ton super interesting today. Google really looks to be the most attractive one. So keep an eye on that. So that's all the prepared remarks. I'm not sure if you guys have any questions, any other stocks you want to look at, stuff like that. I can stay on a couple more minutes, and if there's no questions, then we can end the stream. Yep, no problem. So let's go back. We'll look at futures real quick. Yeah, futures. We're just trading the middle of yesterday's range, kind of middle of pre-market. overnight. So again, not a ton to do right now in my opinion. We're still in the middle of our transition zone. Yeah, Moses, that's a good question. So actually going to our article, we specifically answer that in the FAQ. We need to update that. Let me take a picture of that real quick. Yeah, so in the FAQ, yeah, so we find that after the London close, around 11:30 Eastern Standard Time is when it's generally best to start using that for an end of day level. Reason for that is because we kind of have sufficient data points at that point in time. It can get quite noisy. Just imagine if you have 2 or 3 data points, each incremental data point after that could have a dramatic impact on what it's telling us. But after kind of 11:30, there's kind of enough sample size that we can get comfortable with where the market is likely headed for the day. And obviously, like if there's news events or something, then that price action is going to supersede what this is not like a definitive, but kind of just on a normal market day where there's not a lot of newsy stuff like a tariff tweet or something like that. This is a really good guide. Does that answer the question? Yeah, no problem. But did that answer your question anyways without reading it? Yeah, World Wide Web. So our assumption is, so markets are driven by out of the money call and put speculation, right? And people are speculating with out of the money options or buying out of the money options. So our default is everything's from the trader's point of view. So we are assuming that these options are being bought, and we have alternative data providers that tell us when options are being sold by traders, i.e., the JPM hedge, and we have that automatically update in our system. So yeah, to your point, generally it's our assumption that dealers are selling the options, right? And when we have our external data providers that we aggregate that tell us where those actual sold positions are, then we will incorporate that. Like the Iron Condor today, we know one leg is bought, one leg is sold. We do nothing with the bid and ask. That is full of assumptions, very error prone, and we found that our models give you a very good, yes, it's not exact, right? And if you're like want to be super precise and try and tag every transaction, then we're not right for you, and that's fine, no worries. There's a lot of other people out there that do their stuff, but right, don't let perfection get in the way of good enough. So our models do a very good job of setting you up for the general context, and then we overlay our intraday volume analysis to really help us understand what the flow of transactions are doing. We don't find it worthwhile to try and tag every single transaction. A lot of assumptions, a lot of error prone. Kind of going down a rabbit hole there. Hopefully that answers the question. So yeah, guys, we will be we'll be in the Discord at 9:30, chatting on open mic, seeing if we can find some trades, all that good stuff. Hey Tom, no worries. You can watch the replay of this too if you want. Probably do that now, just rewind it. Yeah, World Wide Web. I mean, feel free to. You can go watch some of our videos, like last night's videos, so you can understand how we interpreted price action throughout the day. We have a playlist, our 2025 Evergreen Education, our blog. We have a robust. We just launched to our members a new onboarding education called the Game Edge Fast Pass. So walks you through our tools, walks you through kind of quick start guides if you're an intraday trader, swing trader, and then we have 7 different modules, 2 or 3 lessons within each module, studying the stage, trend analysis, which is on market trend model, intraday volume analysis, sentiment analysis, which is kind of how we understand our call or put speculators in control. We have a couple different tools for that. Then we have our structure analysis. These are really going to be your key levels, so your transition zones, upside, downside levels, all that good stuff. And then, we have a couple different frameworks. Again, those are going to be like quick start guide, 0DT trader, swing trader, market trending framework, daily prep, a couple different trading strategies that we have. So all that good stuff. Yeah, there's just one membership we offer at $150. Reason we only have one is because people honestly try and obviously take the lower subscription thinking it's going to get them what they need, but they're the ones that take up all of our time and they don't have all the tools, but yet they're wanting all the answers, and it was just getting frustrated, and we just found it's beneficial for the trader just to have access to everything. Yeah, exactly right. Exactly, clients pay the least want the most, right? And frankly, the conversation in our community, or any community, always reverts to the lowest level of understanding, right? And so we really want to make sure that we're cultivating, curating a community that's worth everyone's time. Not to say new people aren't welcome, that's fine, but we want new people to put in the effort. And if there's not perceived value when you're signing up, aka you're only paying $20 for something versus $150, you're probably going to take it a lot more serious if you're paying $150 versus $20. So that's the reason that we do what we do. And AWS is expensive, and it only gets more expensive. So CBOE data, no, we're not using CBOE data intraday per se, or I should say we're not piped in directly with the CBOE. We have external data providers that provide us data. We use the OCC overnight updates, which is kind of the authoritative starting point for every day that every broker gets. And then from there, we're just looking at intraday volume. But no, if you're referencing like that 10-minute CBOE data or whatever people are using today, no, we don't use that. We don't find it necessary. No, again, we don't find it very important to where we need to analyze every single transaction and try and tag every single transaction, right? Like our dashboard, our starting point for the day. Let me find it. Is this, we know what the structure is. The structure is the structure, right? Like that's not going to change. And we know where those key pressure points in the system are. And then from there, we go and we analyze our intraday volume analysis to understand how folks are actually transacting on the day. We just care about what the general trend on the market is doing. I don't care that someone just bought a bunch of calls, like whatever. Well, yeah, I mean, worldwide, like it's, I mean, there's a free 2-week trial, so it's risk-free to you to come see what we're doing. Like, you either like it or you don't, Happy to help you how we can. If it's not for you, no worries at all. All we ask is you just provide us some feedback on how we can improve. Yeah, and I mean, if you were gonna build it yourself, you would have like already done it already, So it's not easy stuff. I mean, we have multiple developers on staff, so it's time intensive, that's for sure. So All right, well, thank you guys. And it's almost time to. It's almost the open, so we're gonna go. I just saw on the centroid you have a decent spike midday and then reverse back. Is that surprised by all the calculated Z's? Midday, maybe you're talking about this spike. I don't know. But yeah, this is specific to SPX 0DT options. There's no other options contemplated in our intraday volume analysis, or this specific visualization, I should say. We offer other visualizations where, like this visualization, which there's an interactive link to where you can go and you can drill down to specific expirations, but this shows you all expirations by strike, and you can see blue is 0DT, and we know that 0DT options are what dominate every single day trading, and then we've just built tools to then hone in specific on that 0DT trading, which is what you see here. Yep. So, all right. Thanks, guys. I'm going to end it there. Open is in 3 minutes. So we're going to transition to Discord now, do some live trade in there. So thank you all.